Hey everyone, and welcome back to another portfolio update for you today. So over the past week, the Couch Investing portfolio were actually down 0.38%, whereas the S&P was up 1.52%. Year to date, the portfolio is still doing quite well, up 26.69%, whereas the S&P 500 is up 8.7%. And since the start of the portfolio, we are up 102.26%, whereas the S&P is up 28.25%. So in today's video, quick overview of the portfolio, the upcoming earnings week with some huge players for the portfolio and for the overall market as well. So we're going to go over what the market expects these companies to do or to report, a couple of extra market data that you might be interested in, quick topic, well, off topic, I would say, Labubus. And then, of course, we have to talk about the deal between the United States and the European Union. All right, I'll start off with the portfolio update, major overview. Nothing has changed since last week. Literally, nothing has changed since last week. I did add another 100 shares to my Oscar position. So that's a 42.5% increase at $14.54. Oscar is still only a 1.76% position in the portfolio. United Health at 1.33%. United Health will report their quarterly figures also, I believe, on a Tuesday. So the ranking goes as follows. SoFi, huge week, of course, since they are reporting. Google Alphabet already reported very good quarter. I did a earnings overview, well, my first earnings video, I think, back from the sickness. So that's already live on the channel. Then number 3 position, also quite important for the portfolio, PayPal reporting on Tuesday. I think that's going to be another very good report. Then we have here Rocket Lab at number 4. We still have some time until they report. AMD, they'll report the week after that. I will make a preview video specifically talking about AMD. Micron at number 6. Uber, Nebius, Alibaba, dLocal, Meta, the cash position. And then Intel, of course, took a big hit on Friday. Is it the end of the road for Intel? Yes, no, remains to be seen. They've got Appcelera, Oscar, United Health, Owlet, and then 2 shares of Nvidia and 1 share of Palantir, which, funny enough, I am up 28% on that just 1 share. So yeah, I guess some things can go up and up and up until they can't anymore. So that's basically the main overview of the portfolio. Nothing much has changed. Nothing will change throughout the week other than, well, if I get the opportunity to add more shares of SoFi, right, when we will have our usual, let's say, beat across the board and then the stock goes down, depends on how much the stock will go down. I don't mind adding more, even if it is the number 1 position here. As for PayPal, number 3 position, I still think PayPal is extremely undervalued and will crush the market's performance in the next couple of years. You might think I'm crazy. That's fine. You don't have to own it. I do. That's all. And then as for the rest, to be honest, nothing much has changed, right? I don't see myself adding to any of those positions at the moment. Most of them are on hold. Nebius is the only one where I want to add more. I might even push myself to just add more at $50 just because of the huge potential upside that this company has. But I do hope that we do see a pullback. The last time I did add to Nebius was 24 shares, an 8% increase at $45.36. Well, in hindsight, maybe I should have added a little bit more, but okay. I mean, we'll see. I'm patient with this one. Already more than doubled my position. Alibaba, I still think it's very undervalued. That's why I added also, I think, 2-3 weeks or so ago. And then as for the rest, dLocal, cheap, they will report. I do expect them to make some move on the upside, although the market can stay irrational for a long time. Meta is reporting this week, so maybe let's have a look at the earnings week. All right, so on Monday after hours, I think there are some bigger names that you might know. Celestica, Waste Management, and Cadence all reporting on Monday. And of course, we will be back streaming Monday morning, 8 a.m. Eastern on the channel. Tuesday, same thing, morning stream. On Wednesday, I think we're going to do the evening stream, the market close, just because Meta, Microsoft are reporting. So Tuesday, before the market opens, pretty busy. pretty busy. I'm going to be live on the channel with Jose, with Roy is coming on as well. We're going to cover SoFi and PayPal, but then do PayPal's earnings call. I do believe that Tanner and Tevis are going to do SoFi's earnings call, if I'm not mistaken. So choose your fighter. Choose me, okay? Pretty simple. So we do have United Health as well. And it's going to be a very interesting one. Centene already reported last week, and the earnings call was the most important one. I think it's going to be the same thing here with United Health. We have SoFi. I already did my SoFi predictions. And if you missed that, it's basically this. I expect new members to come in at 838,000. Cost of acquisition, $285. Galileo revenue, $105 million. So a sequential increase here. Adjusted revenue, $840 million. Adjusted EBITDA, $217 million. And EPS coming at 7 cents. I think it's quite fair. I think it's beatable. The only number where I said maybe they'll miss, based on my expectations, is the new members, because I am looking at their own guidance. And yes, their guidance was quite low. So I don't know. Maybe there is some seasonality to all of it. Remains to be seen. But these are my numbers. And of course, we'll see what happens on Tuesday. Then, as for PayPal, the bar has been set quite low. I do still expect them to have a comfortable quarter, so a beat across the board. As for guidance, I think for the stock to start moving on the upside, we need to see maybe revised guidance on the upside and some commentary that, oh, we do already expect to see revenue accelerate, right? Because we know revenue has been slowing down because they've been focused on profitable growth. Now that profitable growth will soon switch to durable growth, which means we're going to see Braintree actually start to reaccelerate. Originally, that was planned towards the back half of the year, but let's see. They do have quite a lot of momentum with all the deals and announcements that they've been making for the last couple of weeks and months. So I would be pleasantly surprised, I think, with PayPal's earnings report. I don't want to put the bar extremely high, but I do think this is going to be a good one. I would not have been this confident if it weren't for Alex Chriss and the team that he has built. Plain and simple, plain and simple. So that Tuesday morning, there is also Boeing, UPS, and Spotify. Tuesday, after the market closes, Visa, so big player, Starbucks, and Booking Holdings, very, very good company. I booked my vacation on Bookings a couple of days ago, going to Greece again. Wednesday, we have Vertiv before the market opens, Altria, Teva, Kraft Heinz, Virtu Financial, I think that's one of Emir's favorites here, Humana, Etsy, Hershey's Chocolate, and then Harley Davidson's. Wednesday, we have, of course, the big guys. We have Meta and Microsoft. Now, we already seen what Alphabet did, right? As a big tech player, they increased CapEx. Meta, with all of their investments and talent poaching, would not be surprised if they do the same thing. Would not be surprised to do the same thing. And hopefully the market overreacts. Hopefully the market overreacts and tanks the stock, because I do want to own a little bit more of Meta. As for Microsoft, that's going to be an interesting earnings call as well. And don't forget, when Microsoft reports, the stock usually doesn't move much because they only give us guidance during the earnings call. Okay, very, very important to note. But here as well, meet Microsoft. Let's hear them say, okay, CapEx wise, we might maybe increase it or we might keep it, but we do see it grow in 2026. We do see a lot of demand. Cloud is doing well, etc., etc. I think that should be fine for Microsoft to stay where it is at the moment. And then for, of course, the Robinhood folks, Robinhood reports, I think it's going to be another pretty good quarter. Crypto has been doing well. They're still making money on interest. So I think it should be another good quarter. Is it priced to perfection? That's the question. And that's the question with a lot of names more recently. Priced to perfection, even if it is a good quarter, maybe it's not going to be good enough. Let's see. I mean, Robinhood has been doing extremely, extremely well. So that happens here Wednesday after the market closes. We also have Carvana, Lam Research, and Qualcomm, and then Ford and ARM. So very, very busy Wednesday afternoon. Thursday, before the market opens, you have CVS, Roblox. Roblox has been crushing it. Roblox and Nintendo are the only gaming stocks that were worth owning over the last couple of years. Roblox has been crushing it as a platform, as a basically game, and as an investment as well. Tremendous, tremendous comeback. You have AbbVie, Norwegian Cruise Line, MasterCard, all before the market opens on Thursday. And then, of course, another two huge players, Apple and Amazon. Couldn't be more different. Couldn't be more different right now. Apple, I think, and in my prediction here, Apple drops. I think it's not going to be a good quarter for Apple because where are the positives, right? More iPhone sales? I don't think so. I don't think so. Services? Okay, maybe. But yeah, Apple, Thursday after the market closes. Amazon, I expect another good quarter, especially for AWS. So that should be fine. You have Coinbase, Reddit, Cloudflare, and Roku all Thursday after the market closes. So probably Thursday we're also going to do an evening stream, maybe a morning and an evening. I don't know, depends on Jose's availability. So yeah, it's going to be a very busy week on the channel and on the market. I mean, I'm probably going to do videos about United Health, SoFi, PayPal, Meta, Microsoft. Maybe that's just going to be for the stream, but definitely an Amazon video is going to come out during the week, maybe even before the earnings report, because it's been quite a long time since we spoke about Amazon. Then, what do we have here? Currently, it's very quiet. Very quiet in the markets, right? If you look at the volatility index, the VIX, it is at its lowest for the year. Is it the calm before the storm? I don't know. But usually when the VIX is extremely high, you have to buy. And when it's very low, you have to go. It rhymes. Thank you very much. I'll grab my Grammy on the way out. But yeah, it's very low. So stay, let's say, cautious out there. If you look at the first-time home buyers, it's at a record low currently. It's at a record low. That's not great, all right? That's not great for all of the home buying real estate stocks, if we're being honest here. But who knows, when rates will come down, maybe we're going to see a revival. Not maybe, probably we're going to see a revival. Last week, I've showed you this picture without this, the S&P's reaction here. And we said, is it going to go up? Is it going to go down? What's the next move? Well, the next move has been on the way up. Again, is this the up before the rug pull? I don't know. Currently, we have a lot of momentum, right? We have deals being made. We have good earnings reports. So it seems like this bull market, this bull run can continue. And yes, it's true that we have gone up extremely fast from the April lows, but we're not that much more up from the, let's say, previous highs in March, right? You have to look at this from here because we went down extremely fast because of the fears of the tariffs, right? That it could destroy some companies, that it could destroy some economies. Well, it didn't happen, right? It didn't happen. So you have to basically refresh and go back to where you were before, pre-fear, right? This is BC type of thing. And so we did go back. And now we just continue. We just continue that momentum. We have more information, right, from the economy. We have more information from companies. And so we do continue. Now, like I said last week, there are some companies where, yes, if I had them, I'd take profits because why not? Why be greedy, right, when you can secure profits? Just makes sense. Then, speculative trading indicator shows a recent increase in speculative activity. This is also one of the warning signs that we've talked about a little bit last week, and we have to talk about it again this week. It's all well and great to see our portfolio go up and up and up. We've been taking some YOLO bets on the side here as well, but very small ones, right? When we see stocks like Opendoor suddenly 3x. By the way, I did take out my initial investment in Opendoor. I mean, who wouldn't, right? You 3x in a week. Free money, basically paid for my vacation in Greece. just saying. Then you have what went up after that? I think GoPro and some other names out there. So when you see this meme activity and then you see the data here, again, taking profits, making sure that you have cash in your pockets just in case, usually a good thing. Then you've heard me talk about Labubu on the live stream. You thought I was crazy. I thought I was crazy, but no, there is a craze, right? These little dolls here, maybe if you're kids, or maybe you own them, maybe your girlfriend wanted them, maybe your wife wants them, I don't know. But these things have become the next big thing, right? These things have become the collectible of the year. It seems people wait 3 hours outside just to buy this weird, creepy looking doll, right? Some of them go for hundreds and hundreds of dollars, maybe thousands, who knows? But the normal ones, right, the common ones go for, I think, well, since most of them are sold out, I think you can sell them for 30 to 50 bucks or something like that. You do have a secret one in 72 chances that you pull it, and that one can be worth hundreds of bucks. Why am I even talking about this? Well, I'm talking about this because it could have been a good investment, right? This company is public on the Hong Kong Exchange. PopMart is actually the company. PopMart is the company. And as you can see, this stock is up 527% over the past 12 months. It has actually 13x since February of 2024. 13x in a year and a half. Why? Because these things have become extremely popular. And it's not just Fugazi, it's a Wazi, it's a Woozy. No, the company is making a ton of money. This is in Chinese currency, by the way, and they report, I think, first half, second half. This is for the second half. Revenue up 106.9%. Gross profit up 125.4%. Profit, operating profit up 237.6%. Diluted earnings per share up 190%. This company is printing money thanks to these dolls. And of course, for due diligence purposes, I had to buy a box as well. Very fluffy, very cute, and yeah, makes up for a very good present, whether it's for your sister, for your mom, for a girlfriend. Everybody is happy when I show them this doll. So yeah, I don't know. I just wanted to share this. Then, before I forget, Oscar actually announced their preliminary financial results for the second quarter and revised 2025 guidance. Initially, the stock went up 5%, then it dropped 4%, and then it rebounded, and then it dropped again. Okay, they will still report the whole of their earnings, I believe, Wednesday, August 6th, and they'll also have their conference call. So, what did they tell us? The individual market is a competitive healthcare marketplace that provides affordable, high-quality coverage for millions of consumers across the country. We are taking appropriate pricing actions for 2026 that reflect higher equity in the individual market, and we will continue to take steps to deliver for our members, partners, and shareholders. Oscar has successfully navigated dynamic markets before, and we remain committed to our long-term strategy to bring more employees, individuals, and families healthcare choices that fit their needs through the individual market. And so, the company expects a loss from operations of approximately $230 million and a net loss of approximately $228 million for the second quarter. The pre-announcement is driven by a review of 2025 marketplace data from Wakely, an independent actuarial firm that analyzes paid claim submissions through April 30, 2025 for most marketplace insurance carriers. And so, what do we get for the full year is as follows. Total revenue of between $12 to $12.2 billion, which is higher than before. Medical loss ratio, also higher than before, between 86 to 87%. SG&A expense ratio 17.1 to 17.6%. Then loss from operations, $300 to $200 million. Now, look at those numbers. And then look at the original full year 25 outlook. So revenue is expected to be almost $1 billion higher than initially thought. So that's good. Medical loss ratio is, of course, going to be much higher than what they originally thought. Previously, it was between 87.7 and 81.7. Now we're closer to 86, 87%. SG&A expense ratio is a bit lower, and that's very good. Then, of course, earnings from operations. Previously, they thought they actually had earnings from operations. This time, it's still a loss. So, mixed bag here, although it is quite, let's say, good to know that revenue is going to be higher and since they can control their own fate, I think they'll figure out the rest. I think they'll figure out here the medical loss ratio for the long term. I think they'll figure out earnings from operations as well. But of course, we'll know much more on August 6th, and don't be surprised if you're seeing this name go up or down after United Health reports. Moving on to the big news, things that will definitely move the market on Monday. Trump announces EU trade deal with 15% tariffs. So let's have a listen.
So we're going to do the following. The European Union is going to agree to purchase from the United States $750 billion worth of energy. $750 billion worth of energy. They are going to agree to invest into the United States $600 billion more than they're investing already. So they're investing a large amount of money. You know what that amount of money is. It's very substantial, but they're going to invest an additional $600 billion. They're agreeing to open up their countries to trade at zero tariff. So that's a very big factor. Opening up their countries, all of the countries will be opened up to trade with the United States at zero tariff. And they're agreeing to purchase a vast amount of military equipment. We don't know what that number is, but it's the good news is we make the best military equipment in the world, so sort of you have to do that. I mean, until somebody tops us, which is not going to happen. We're way ahead of every other country in terms of the quality of the military equipment. You saw that recently.
So that's part one. Part two.
A deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive. The investments Mr. President just described that going to go to the United States and the purchases over there. Indeed, basically the European market is open. It's 450 million people. So it's a good deal. It's a huge deal.
Yeah.
It was tough negotiations. I knew it at the beginning, and it was indeed very tough, but we came to good conclusions for both sides. So again, congratulations and many thanks.
Thank you very much.
Thank you.
So you heard it here first. Big deal, huge deal, the best deal, billions. So anyways, it's good news. It's good news. So I will recap. Baseline 15% tariff on most goods traded between the United States and the EU, impacting sectors such as automobiles, steel, aluminum, and various manufactured goods. The EU agrees to purchase $750 billion worth of US energy and invest another $600 billion in the US on top of whatever they're already doing right now, which is a bit unclear. All EU countries will be opened up for US goods at a 0% rate for specific categories, and some elements of agriculture and other sectors will also see expanded access for US companies, though pharmaceuticals may be excluded. So, there you have it. Pretty big deal, the huge deal, the best deal. I do also think that the US and China are going to still have some talks. I think that deadline gets extended as well. So yeah, the momentum of the market will definitely continue, and the focus shifts, thankfully, to company-specific performances. And so that will be it for me in this video. Do expect a lot of content coming your way throughout the week, earnings videos, previews, and all of that. So make sure you are subscribed, hit that notification bell as well, especially for the live stream, so you don't miss any of those when we do go live. Yeah, and I see you all in the next one. Bye-bye.